you that question. Do you now? Running from Bearz. Good morning, sir.
What's going on, man?
I'm doing well.
Doing, Maria?
Yeah, what you been going? What you got going? You're on the channel right now. What's up?
I'm on the channel. Yeah, Mr. Talks, man. I didn't like how our last. I like to live my life with a little regret, and I didn't like how our last talk ended. So I thought, I'll just call in. We'll just talk.
I'm down. I'm always down to talk. What's going on, brother?
Not much. I thought, since the quarterly earnings and we're out, and I didn't. Like I said, I think. I know when I talk about accounting, I sound pretty bearish overall because that's how kind of nerdy ass accountants talk. But I didn't mean to, piss me off in your Discord. It's kind of how I talk, but it seemed like stuff went sideways at the end. So I know we all want the best for GameStop. It's just I think I come at it a little differently, and then inherently it's a little more bearish, right? But
I think my biggest deterrence from what you said in the Discord, and just so everyone's clear that's here, a lot of people were there, a lot of people heard or read. Was that you were critical of the leadership and the lack of transparency, but you did it from the stance of you're able to question when you invest, and no one said that you weren't able to do it. My biggest thing was, if we know the plan and it has been told, what is there to question? Putting out the thought and or just a little bit enough of doubt can deter someone from making a choice to say. Certainly when they respect the words that you say. Running, you've had a great presence from the stance of Bed Bath & Beyond, GameStop, fundamentally sound investing, and the actual balance sheet. Like you have footing, right? Which you say people really react to. So when I saw you speaking that way in the Discord, it was more along the lines of, well, you know damn well what the plan is. I've been speaking on the plan for the last 2 years. So I thought it was a backslide. It was a backhanded statement at me, as in to say, you know what? I don't care if Bearz has been right for 2.5 years and they're going the right direction. This is the negative of it. And we can all point out the negatives, but the negative is that people just don't want to sit back and watch it happen. They want to get it now. They want answers now. The hell with that. I don't. I think the trailing 12, I think that they're going to be amazing. I think that they already are profitable, and I think the net position is going to show that within these next 2 quarters. So you being the math guy that you are and the balance sheet guy, would you agree?
Yeah, let's talk about that. It wasn't out of a place of disrespect, and I do, like, all my conversations are more meant for, hey, this is what I've seen in my experience. Let's talk about it, right? Because I don't know everything, but this is what I've seen, and if I get stuff out there, like we get different thoughts going around and stuff I had considered, right? Like I did a post on Reddit about Q2, and I had a lot of good insight from people just dropping comments. So I like that part. Where I was struggling is, it felt like, accountants talk a different way, right? Because the nature of accounting is like, I can't talk in full statements like 100% this, that, because like it's impossible to audit every transaction. So that's why I say, 50, 70, 90%, which are the common like accounting thresholds. But I guess I kind of struggled too with, it seemed like everyone was okay with me, basically from an accounting standpoint, talking Bed Bath at AMC. But then I don't feel like my questions were too harsh on GameStop management, because it's, we just, all the stuff that we know about the NFTs, the marketplace, the digital sales transition, those have honestly kind of fallen flat, right? And even with Zelda and Diablo, they were up Q2 over Q2, but year to date we're down like 5%, right? And if you take out Zelda and Diablo, then I've got questions, right? So, and the collectibles looked really soft on top of that. And yeah, the balance sheet is solid, but I did transition my kind of line of thought, because GameStop said they're going full year profitable. So it's no longer okay for me to want a company to shove a bunch of cash into the mattress, right?
Well, they're actually getting paid off of that. So
right, but if we're just going to park it in a bond, that's going to get you a bank valuation. I don't think any of us are signed up for a bank valuation, right? Like, let's go out and M&A this, let's grow revenue, let's do something, right? The gross margin improvements are impressive, but it's largely being offset by the decline of revenue. And if collectibles is going soft, then it's like, well, I'm struggling with that math a little bit.
Well, I'm just curious, what world do you live in? Do you live in the world right now where the Fed's coming out in 2 days and you're going to increase rates again, and they're pausing, increasing? You're getting essentially 1/8 of a point increase every month. That's the world we live in. So if they were to go and start spending money and start, acquiring things and showing transition, that's not the smartest thing to do. To show nothing and to sit on your hands and sit on the cash is the right move. That right there alone tells me everyone's looking from a metric standpoint. Like, show me the sheet and show me what it is. Like, you're talking about soft line sales, and you're talking about this collectibles being down, all that stuff. The whole world's down. So yeah, I'm okay with the number being down, but what are you doing to offset that? They're closing down shop in Europe, and which you want to do because the conversion of the US dollar versus them. They're going to mature on those come Q3. They have the maturities themselves on what the bonds are yielding right now, which is the smart thing to do. They're not just running a shop. They're not just running cogs, right? They're actually running a bank per se, where they have 1.2 billion and they've got to let their money mature and make them money during this time frame. So they're money managers as in addition to being product managers. So I think that they have a great scope and cusp on it all. When I see Larry Chang's tweets, and you look at Larry Chang's tweets, and he says, the gross margin versus revenue growth, this is one of the most offsetting indicators when people say, well, are you really growing? Are you really, is it really transitioning this way? He says, growth is not it, and the revenue is not it. That's not the telling indicator. That whenever you're looking at no, it can't be. It can be if you're trying to show. It can be.
It's a top figure. Accountants put it at the top of the statement.
You're looking from an accountant standpoint. That's the whole point, Ronnie. If you're looking from an accountant standpoint,
generates cash,
but you're not looking from a value standpoint. You're not looking from a value.
Neither are you because you're arguing. Well, they're going to get 2% on bonds. Like, okay, great. Then slap a bank valuation on it and call it a day. That's not. But you can tailor market for what they call shareholder equity. That's the bottom line. It's not revenue. Right. So when you go through and you say revenue, what's the profit of this? No, shareholder equity. What is the company actually worth? That's the value of the company, not the balance sheet, the plus and the minus and what you get. I give you this example. No, I know.
It's not about how many yards I throw. It's not about how many yards I throw, and it's not about how many points I score. You see, if you're looking at football from a football standpoint, the top scoring team in the whole world, look at how many points they scored. But no, did they win? Did they win the games? Because you can score a whole bunch of points and lose.
Football, but they lost $300 million last year. That's a pretty strong. If we're going to talk win-loss, let's talk net income. Then
let's talk net. Let's talk net because you're talking about cash flows versus income itself. Think about it. They have a cash burn of $30 million year over year. $30 million after everything's said and done, and they've lost 300 operational. They have a $30 million burn off. What are we talking
about? Let's talk about that though. Let's talk about it. It's good. It's valid comment. Now, if you look at the cash flow statement and you start with a $300 million net loss and you're trying to get to cash flow positive, the only way you're going to do that is if you're going to have pickups on your balance sheet. And we see that because they didn't buy. The inventory drew down, which saves you cash, and AP also was not paid as much down, right? Which is fine through the holiday season, totally normal for a retail. So yeah, it took a $300 million loss or outlay of cash, and it got you closer to a net zero cash outlay. But until you address the net loss, it's very hard to go sustainably cash flow positive until you go net income positive, because the statement of cash flow starts with net income, right? And otherwise, you're just trying to dig out a hole.
Listen, you're on the wrong side of history. You're on the wrong side of history. You can come in with your meltdown attitude about it, and you're all.
I'm still long.
Listen to me. I don't care if you're long. You're long on an investment, but you're not long on GameStop. There's a big difference here. You're going to take your profit and run. There's a big difference here, because I'm going to tell you something. You're talking out 165 days too early out of your ass, because in 165 days, that's going to be 2 quarters from now, you're going to see what this T12 really is. You're going to see what Q4 really does for a balance statement. You're going to see the transition that was Q3 of last year versus this year. You're absolutely out of your mind. You're out of, and you're so wrong on it. Yet you can't be factually wrong. No, I'm talking about percentages, right? Think about it. You say you talk and you can't talk in matter of facts. But yeah, I'm the same guy that came out and said,
if you're gonna play fundamentals, are we playing fundamentals or not? Because you start talking fundamentals, and all of a sudden I can't see the forest for the trees. Like, which is it, man?
You can't. Okay, so $100 million swing quarter to quarter. Yeah, you can. No, it's so easy for you to stand here today and say the shit you're saying. It's like this. It's like you. I'm telling you, I always refer back to sports. It's like having the best recruiting class and the best draft class, whatever it be. But then in preseason, you're like this. No, I haven't seen them play yet. They haven't proven it. They haven't done it. It's like they're going to. They're going to play the damn games. You got to see how it happens.
We're at halftime, man.
No, we're not at halftime. You are.
Q2.
You are.
Q2 is half for the year. Like
the game hasn't even started
yet. We're looking
at
annual basis.
What? Are we? Hold on. Let me ask you. Are we in a bull market? Is the market up and running? Is the economy thriving right now? No. Interest rates are sky high.
At 4:30. I don't know.
Right. Interest rates are sky high. And you're going to tell me that inflation is not upon you. No, we're not on the equal playing field right now.
I never said that.
No, I'm just telling you.
If we're...
It's not halftime. You're playing. You're doing one game at a time, and I'm doing a whole season. You're playing it at.
No, I'm taking management's words. No, we're trying to take management's words, and are they tracking? And if I look down the road, I have concerns, right? Like I never said Q2 has good things. Like I said that I did a big post about it. It's fine. It's just there's some long-term concerns. I have things I want like answers on. We probably won't get them, but we're just kind of left with the numbers, right? At the end of the day, the numbers are the numbers. Right?
That's the bearish stance, right? I mean, that's just what we're doing. We're just going to say that you have long-term concerns because the math doesn't work out for you. Imagine being me 2 years, 3 years in, and I'm telling you the math will get there one day. The Wall Street will catch up one day. And I already said how it's going to happen. You know how it's going to happen. Yet you come in here and feed out this shit. No way. No, let me tell you something, Bearz.
It's okay.
No, it's not okay.
Man.
And I'll tell you why.
I took a lot of time.
You took a lot of time to do what?
Like, I spent a lot of time in Discord really trying to educate people. Like, hey, I never said this is the end all be all, right? I said, let's just talk about the stuff. Here's what I think. And everyone was fine on Bed Bath and AMC. I'm talking no different.
No, because here's what you're doing. And I'm going to explain to you what you're doing, okay? And it's the most easiest way to do it. You come from a think tank that goes on Reddit, and you guys have your platforms, and you guys talk it out there. But when you come here to this platform, this has more visibility for you. So when you're going to talk about it this way, certainly I give you this footing. But I talk in certainties, i.e. Bed Bath & Beyond's going under, it's done. It doesn't look good, it looks bearish. Bullshit. It's going down, it's going over because Connected Dots tells you so. AMC, they can never get outside of that balance sheet. It's done, it will be done in time. You're going to see all the gymnastics in the world. But it's done. It's baked. And they've lost 99% of their equity. And same thing with everyone else that put into Bed Bath & Beyond. GameStop's not that. Yep. But yet you come in here.
Never said it was.
You come in here saying, Renz, I want to talk it out. Hey, I'm going to tell you this with the most respect. Fuck you and the way you do your math and the way you speak. I don't walk on eggshells for anybody. The amount of respect I give you to let you say the shit you say, to put out 6 months, we're not doing this, all the bearish stance, that's not what this is. You're a grown-ass man that knows the difference. It's like going to you and saying, hey, you want to work at a company for what, a decade and finally find value in yourself, in your home, in your life? Or, you know what? It's year one. I'm not the fucking CEO, so you know what? It's bullshit. I call this bullshit company. No, work for your fucking money. Work for this investment. See what it is. And if you can't get past 6 months, if you can't get past 2 years, then you should have never been here anyway. Go be a day trader. Go write the options you write. But that's what you've been doing. You've been writing out this the whole time, selling it off to the people as being bearish, and yet you have a Discord with 1,000 people here. There's 1,000 people in this Discord.
Q3 review, man.
13,000 people that watch the show, and you're going to tell me that, I'm just putting it out there just to keep it real. No, you're not. Do you see Larry Chang putting out tweets every day to tell you the complete opposite of what you just said?
Wasn't he long on Carvana? That's the same guy we're talking about, right?
He's not long on Carvana. Long on Carvana would be him buying in and being on the board of directors. Oh, wait, that's what he is for GameStop.
Have we looked at his past companies, though? Like, I thought Lynn sent you some stuff, didn't he?
Yeah, it wasn't Carvana. Do your due diligence, please. You're the smart guy. You came in here.
Man, look, we got sideways.
I didn't get sideways. Look, man, this is who I am. This is who I am. I don't go sideways.
If you're cussing me out, that feels sideways to me.
It should feel that. You should feel that way, though. Because you're the weasel laughing, snickering at the fact that you post something. It's like that nervous little laugh you do. And it's not fair. It's not fair that you're the smartest guy in the room when you're walking to these rooms.
I'm not the smartest guy in the room.
I promise you. I promise you. But when you walk into the room with everyone else in a Discord and or you push out what you put out on Reddit, yeah, we know you have posts and you review balance sheets, but this is deeper than a balance sheet. That's the point.
Okay, I hope it is. But the point, if we're talking fundamentals, it's still valid. Like it's
It is valid. So then tell me how I'm wrong on T12. Tell me how I'm wrong. Because you're 80 days away from getting your shit pushed in right now on the info that's coming out. There's no way. I've already broken it down.
No, I agree. I said a Q4 was objectively good, but my concern with Q4, if I look down the road, it's like, okay, they had a good quarter. Revenue was up in a tough environment, all that good stuff. Margins were up. It's all there. But if I look forward, I've got concerns that stuff keeps getting soft and we're have this higher than normal valuation. Then I want to see that the SG&A continues. I want to see that revenue.
Okay, hold on. So GameStop has a double beat on the market. All right, and that's soft. In addition to having a double beat on the market itself, just quarter two, quarter three set up for even a better run. And you're worried about what happened 2 quarters ago? Like, I don't run it back. I don't live my life in the past. I see what's coming forward. And when you say, oh, I don't know what's going to happen, it's going to look soft on you because you don't understand that they're shrinking their footprint, that they're doubling down on what they do. That's why software sales were up. You think it's just 2 games drive this market? You don't think it's an industry thing? You don't think people actually want physical copies? Tell me why digital copies and physical copies cost the same amount. And I'll tell you what people want to pay for. They don't want to download something they actually want the product itself.
What percentage of digital sales, what percent of game sales do they account for? Like 70 to 80%?
You wouldn't know the difference. You wouldn't know because they don't tell you that metric. GameStop doesn't.
No, I do know because it's kind of concerning.
You're doing an industry-wide thing, right? Stuff. Where Nintendo doesn't promote the online aspect of selling, of digital. They promote the actual physical copies, and Nintendo's up. And then you go ahead and look at PlayStation, and guess what? They all have to partner up with GameStop because it's the #1 destination for gamers. Or is $6 billion not that much? It's just not, apparently.
Is it? It's down 5% year over year. Like it's
and how many stores did they close? They're actually making more money per store. Their money has gone up per store. Per capita, they're making more money.
So what's the next move if we maximize gross margin and we've cut our stores to the bone and revenue keeps slipping?
The revenue doesn't keep slipping. It's an inverse. It's the equilibrium. It's the switch out. It's the burnout. It's I close a store and increase more online. And that's the ratio. And maybe they know that metric better.
But they've already kind of abandoned online.
They haven't abandoned online. It's called e-commerce.
They're going back to brick and mortar. Like that's what
are they opening more stores? Did I miss something? Did they have an increase in open stores?
Retail.
They didn't have an increase in open stores. They closed more stores. Closed 168 stores last year just domestically. So you tell me exactly how they're increasing the brick and mortar. Just because you heard that narrative somewhere on stock tweets doesn't mean it's really happening. You have to look at it this way. Oh, they just have 2 fulfillment centers for no reason. 2 fulfillment centers for no reason on opposite ends of the country. Pennsylvania and Nevada. But that was just for what? For storage?
That's a good question. I can't tell because like inventory is still kind of high. Like
inventory is supposed to be high. They're going into quarter 4. It's supposed to be high. They're getting ready for Black Friday.
And Q2.
Look at it what they did last year. They pumped it up in Q3. They pumped up their inventory. They did it this time in Q2.
We're talking about Q2.
Yes, they did it this time. And what did they do? They came out net negative, what, $2 million? You're making my point for me. They don't have to pump up the inventory. And guess what? Now they're positive 50 million. That 50 million that they spent on inventory this quarter, they didn't have to. The additional, I'm saying. No. But hey, what do I know? I only know October is one of the greatest months for games coming out right now, but you wouldn't know because you're not a gamer. But I'll leave it at that.
Been playing. I like City Skyline, man.
You play marbles. That's what you do. You play marbles and shoots and ladders.
Fallout 4.
Yeah.
I like City Skyline. I like
Fallout.
SimCity.
What is this? What are we, 5 years ago? The games you're playing? I'm telling you right now. Listen, Bearz, there is nothing, you're living up to your name right now. There is nothing that you can say that's going to deter that balance sheet. You can talk all the shit you want. That math is going to come out on the other side. And I'm wrong. Fuck you.
I'm not talking shit, man. I'm just here to a different.
You're not here to do shit.
Opinion, man.
You're here to punch out the bullshit. That's what you're here to do. And when I say fuck you, it's a term. It's a love. This is how men talk to each other. When they say, get the fuck out of here, you're full of shit. That's a loving thing. Now, if we were in a boardroom somewhere and we're having a conversation, Hey, if you want to be politically correct and we're having this corporate talk, then we're going to have it. And yeah, and I'll talk to you with all the respect in the world. But when you come into my background and my playground here, and you're going to tell everybody, no, they should be leery, they should be aware. Hey, I know what you wrote.
I've always enjoyed the way you talk. I've never told you to change. I've always enjoyed your kind of rough and tumbleness. Like I can never do that, and I respect. You do a better job.
Well, that's a good question. Let's talk about that. That's a good point.
Yeah, that's my line, man.
Yeah, let's talk about that.
I talk like a huge nerd. That's why I like talking to you, because you inject some humor into this stuff. Because otherwise, I'm just a guy doing accounting.
You're boring as shit, man. Yeah, I know. You're gonna be dry and
boring as shit.
I've seen you review your stuff. It's okay.
It's boring.
Just know the economy's going to come crashing down. Okay, the UAW strike is going to affect this economy. This whole thing's going to come crumbling down, and it's supposed to. It's an election year. This is the way they plan it. And when it's all said and done, there's going to be a couple of choice companies out there that are going to flourish eventually. But right now, you sit on that cash. You let your cash make you money, and understand that GameStop is more than just a retail brick and mortar company. It's a bank, it's an institution, and it's a way of life. Obviously, for me, because I did the homework. That's where you're at, bro. Yeah. I appreciate you, though. I really do.
No, I miss you too. You got some good guys in Discord, and I always enjoyed our chats. Like I said, I just didn't, I know we talk, you have different rhetoric, which I do enjoy.
What I told you when you left the Discord, because I didn't kick you, you're not blocked. You walked out on your own.
The room, and I thought it was an open conversation.
What I told you was this. It's a lonely place out there on the internet without friends. I don't give a shit about any of that. What he does is he does math. Okay,
I love all this.
You're
this is a civil conversation. I'm not getting told to fuck off. This is what I'm here for.
Yeah, exactly. But I'm saying you can do that. You can create your own platform for it, and you've done it before, and I'm sure you'll do it again. But I promise you.
No, I mean, we've talked in the past. I didn't like how it ended, and I want to talk. I try to minimize regret, and when people are
minimize the regret and saying that. Okay, then good. Come back here in 6 months. I'll be here. I'll be here. Saying I told you so, like I told the rest of the world. I don't know why people don't understand.
I'll do you one better. How about if they go? I'll do you one better. How about if they go positive? I will fly down. I will buy you a beer in person. How about
that? The hell would I want to hang out with you? What the fuck?
Because we're fun, man. Look at this fun. You cuss me out.
I'll tell you what you can do.
Don't matter.
I'm going to tell you right now, running with Bearz.
Come on, Moon Man.
You're 155 pounds soaking wet. You're running marathons. You're living your best life, and you can go ahead and buy that beer from Molly, and you guys can hang out. Because I'm going to tell you right now, it's the only friend you got right now. I'm telling you, you can't talk bad about GameStop and Ryan Cohen and the leadership and think
why not? Is it an echo chamber, or are we having an honest conversation? Is this an echo chamber, or are we having?
It doesn't have to be an echo chamber. The message and the direction of the company has not changed. Ryan gave out.
It has actually.
It has not.
Shifted. If you go through the filings, they've changed their priorities. 2 years ago they focused on long-term sustainable revenue growth. You look at this past one, now they're saying profitability. That's a big shift, man.
Pragmatic growth.
It's English.
Realistic
just go read it,
growth. Yeah, you should go read it. You should go read a balance sheet. Who gave you your degree? You need to go back.
I went to Alabama.
Roll Tide. That explains it all. Holy shit.
Roll Tide, buddy.
Yeah, I bet.
I've always said that.
Yeah.
Just a redneck guy reading numbers.
You said redneck math. That's what you said. Well, somewhere in there.
I'm not being boring, but I'm going to head out, guys.
Yes, thank you so much.
Out there.
Monty, I appreciate you.
Thank you, Monty. It's good to hear from you.
Hey, check out Monty's channel. He has videos. I'm sure you can invade his chat and his channel and tell him how bearish you are on your stance. This is crazy. You double talk. You say you're long GameStop, yet you talk bearish. And it's not that it's an echo chamber.
That's the role of finance. Yeah, let me talk about that.
Oh,
go ahead. Point. But like the role of finance, the role of finance in operations, like someone has to hold operations accountable. So if operations says they're going to do X, someone should hold them to that for the health of the organization. So everywhere I've worked, you need some sort of counter opinions on stuff, right? Because you can't have everyone just agreeing to everything.
You get paid to do that.
About path.
No, it's so funny you say that. You get paid to do that. So tell me, who's paying you to say the shit you're saying?
Are you serious right now?
No, I'm not. That's my point. That's my point. You get paid to speak that way in those rooms. I'm in those rooms. You know this. So when I'm telling you a balance sheet and you look at it from GameStop standpoint, and the leadership puts their money where their mouth is, even today, as they still buy shares.
Over, man.
They keep buying shares, right? They keep supporting their company.
Yeah, but leadership keeps. Have you looked at the leader, like the finance leadership, especially? Man, they've rotated over heavy. Most people are bouncing less than a year. Like there's.
Yeah, they don't. You say most people. Watch this. Most people are bouncing, right? Think about it like this: they hired how many additional people when they first came on? 400 plus, and the people that are bouncing and leaving are the additional hires. Linda already broke this down on the actual hires themselves. But who was there already? They had fundamental people there already. Then they have Jim Gribble, who's actually a CFO. That's what he does for a living. Yet here he is just on the board of directors. So do they need a CFO? Do they need a CEO when you already have the best in the business on the board? You don't. You don't. You have glorified accountants.
You don't need 2 C-suites?
You don't need it.
Really?
No, you're going to pay them?
Really? Okay.
What is it that they're doing that you can't do? Because apparently these guys can't do math. If they're doing your kind of math, then I don't need them.
I miss you, man.
Yeah,
CFO should be setting the overall leadership tone of the business, dealing with investors, raising capital, and dealing with overall and working with sales. Especially a CFO is heavy on the sales organization, making sure
you know what CFOs are doing. They're at the latest golf tournament and they're doing public speaking engagements. That's what they're doing around here. That's what it is. Because I'll tell you what happens.
Not the CFOs I've worked with.
Yeah, apparently.
They're the ones working the hardest.
How?
I mean,
what is there to do at GameStop right now, other than whatever the plan is for them and how they're churning and burning? That's on them. They're literally not going to expand. They're not worried about top line revenue the way you think they are. They're just going to show you just the platform itself, the model. Are we profitable at this scale? And then if we are, then let someone invest in what we're doing. And then you can expand. But guess what? This is not the time to do it. Who the hell is going to come in on GameStop when Ryan Cohen controls the money, the whole engine? People only invest money when they can control it. That's the difference here. Retail owns this company. So if we're going to live and die by the way retail shops and promotes this company, well, then let me do my part to buy as much as I can and to promote it as best I can. I'm one man of a million, and I'm going to try my damnedest. But I'll go out swinging, and the balance sheet tells me I'm winning. That's what it tells me. And I understand the business. I understand the seasonality of it, and I see it coming. So when you annualize on inflationary numbers, which we have done, you're going to see extreme switches, right? These motions, like $106 million swing from year over year, because you're annualizing on that. They have done the right thing over the time frame, but everyone wants to look at it as a small window, i.e. 6 months, 2 years, 1 year. I'm looking at it in a decade standpoint. We're doing great. We're building the infrastructure right now. And when it's all said and done, you're going to be on the wrong side of history. That's the point.
That's good. That's some good thoughts there, Morant.
Yeah, thanks.
I can have, I've mentioned, it's not all bear. I show both sides. I show the bullish side. I said a lot of that. I also don't think it's a problem to talk about where the shortcomings are. But
I understand that. Right? Here's my problem with you, Bearz, and with your message. Okay, and a guy in the chat right now named Matt A. He says it perfectly. He says, you're saying it's halftime, and that's trying to tell me that the game's only this year. Right? This game is forever. This game is forever. And that's why they have a metric called the T12. The trailing 12 tells you that we're doing a fiscal run, right? Every year it's evaluated every quarter fiscally. So it just keeps moving the metric. I'm measuring it from year versus year. It's not calendar year, it's year versus last year. And that's the way you can evaluate this company and the trend of the company. And what's the trend tell you? If you want to talk about soft sales and soft top line revenue, at the cost of what though? They're not sacrificing. Their expenses have come down, therefore the top line will come down. That's okay. Do I need 20,000 stores so my top line revenue can show an increase? No, they're making more money per man hour. It's MPH, money per hour, and that's the way it's working out for them. And they're going to do it well, and they're running the right business. So I assume you do math on that end, and maybe you'll understand the metric. A little bit. Maybe you won't, but you bearish on this. You're crazy. What are you buying long? Anyway, I'm curious. What are you buying these days? I know you're a gambler, so what are you buying?
That's a hardship for them.
I got my index fund. This is pretty much my gambling stuff. It's GameStop. I got all my boomer investments, right?
Yeah.
And then GameStop.
Sure.
So,
my boomer investments, Costco. How's that one looking?
I love Costco, man. They do everything right.
Thanks. Oh,
it's impressive,
yeah.
right?
Thank you.
I like they treat their employees well. It's all there, right? It's,
Can you
it's a solid
imagine working
company.
for me?
So
Could you imagine working?
I would love it.
Yeah, it's
I think
pretty
we have a good time
eventful.
together.
I'm a beast, bro.
Right. All right. Well, I've taken enough of your. I've
Hey,
taken
you
enough of your
did
time.
you did
Good
great.
catching up.
You did great.
Good catching up. And
No,
we
no.
will
If you thought I was going to say bye,
I miss you, man.
yeah.
All right, later, Moritz.
I have a word for you. It's punk. I'll see you.